Hello everyone, welcome to my YouTube channel. So today we will learn about the cost segregation study. In this cost segregation study, we will learn about the basics of it, what are the benefits, how a person can calculate depreciation on cost segregated property, and how person can save taxes with the help of cost segregation. Cost segregation is a tax strategy that identifies and reclassifies components of a real estate property into a shorter depreciation lives. So I will give you an example over here. If any person purchase any building, then he can depreciate the building for 27.5 years or the 39 years as per their usage. And if here person will go with the cost segregation study, then cost segregation company will allocate the components of a building with their respective useful life. So here I will explain it more. Uh, Building include different components like furniture, appliances, flooring. So each components have their different useful lives. So cost segregation company will identify those components and will allocate the cost and respective useful life to the different components of the building. So that allow us to claim a higher depreciation. So this is an example. I have taken it from the Google for better understanding. So the cost segregation here conducted at property located at 4820 Lakeview Drive. The cost of the property is 685,000. Land allocation is 65,000 and depreciable value is 620,000. Land is a non-depreciable asset. So this is a scenario number one, where the person acquired the property and cost segregation done. Both are in the same year. So here, if a person will not do cost segregation, then he can claim a depreciation of 22,545. But if person will go with the cost segregation study, then he can claim depreciation of 39,525. So here he can claim a higher deduction of 16,980. This is scenario number two, where a person purchased a property in early years, but at that time he is not conducted any cost segregation study, and he conducted the cost segregation study during the year. So in this scenario, he can claim previously unclaimed record. The form 115 here, what he purchased the property as 1st of January 2023 and conducted a cost segregation on 1st of January 2025, means after 2 years. So he already claimed depreciation for 2 years, means he can claim depreciation of 45,048. And if the person conducted a cost segregation at the time of purchase of the property, then what is the depreciation that person can eligible to claim? So that amount comes to $79,050. So the difference of both amount will go to the section 481 adjustment. The difference will come to $33,960. So the person claim a high deduction of $33,960. Thank you so much for the watching a video. Please do like, share, and subscribe the channel. Thank you.